Hi guys, this is Vlad with a very quick review of today's price action, and once again demonstrating the logic of the power of 3. Let me quickly remove this opening range gap so the chart is a little bit cleaner. Once again, we have observed the same phenomenon occurring. Accumulation between midnight and 7 or 6:50. Once 650 hits, price starts expanding higher during manipulation, daily manipulation phase, and ultimately reaches high of day at 9:45 before it starts melting. And you see, once distribution cycle starts here, we are just going down from there. Now, once again, same phenomenon: accumulation, manipulation, distribution. Okay, the daily power of 3. And those of you who are using the indicator and applying the logic probably notice that there was no SMT between accumulation and manipulation phase today. Here. And that's all right. And there was no SMT between manipulation and distribution in distribution also. You can see very clearly. Here is ES at the bottom. ES pretty much did the same thing that NQ did. And as I mentioned before, SMT is not necessary in order to find good setups. It's more the case of SMT being a confluence rather than a confirmation that the price is about to run. Okay, but there is another thing that we have spoken about last time that will always be there, present on your chart, and that's going to be a new day opening gap or a new week opening gap that we're gonna trade from. Okay, so the setup will originate within a new day opening gap or a new week opening gap. Okay, so that's your number one confluence, and only after you see price trade in a previous NDOC or an NWOC, then you can start looking for SMT if you think it's necessary, or just look for your setup or your particular entry model to form. Okay, it's usually going to form within manipulation phase. So before I show you the execution that I had today, I didn't record that, by the way, but I'll show you in a minute the logic. I'm gonna go on the daily because you're probably asking yourself, yeah, but where is the new day opening gap and new week opening gap here? So I'm gonna go on the daily. I'm going to show you this huge gap between Friday, June 12th and Monday, June 15th. Okay, so this is a new week opening gap. Okay, come on. Alright, so let's mark it with new week opening gap of June 15th. Okay, so I'm gonna put it to the back. So let's go back on the 5-minute chart. Okay, so you see how this looks, and this is, by the way, the continuous contract, and you can put your fib. Sorry, not the octants. I don't think it's necessary now. the fifth quadrants. So you can see this dotted blue line. I don't know if it's visible. Let's make it bigger. Like this. You can see where price stopped, right at the upper quadrant. Okay, beautiful, beautiful algorithmic price action there. Okay, during manipulation, and then we just melted. The directional bias was bearish, first of all because we opened at a premium, and this blue box here is the opening range gap. Okay, failed to fill it here, then shot up to the upper quadrant, found resistance here in traditional trading terminology, and then melted down, completely filled the gap, and continued down. Below accumulation phase low, and ultimately trading below these lows and continuing further down outside of the new week opening gap. Okay, so back into the huge range of yesterday. So at least that's my expectation now. But very important, guys, once again the manipulation happened within this phase and then distribution. Okay, and by the way, look when the high formed, it was 9:45. If you remember the very first video from the series, when I had my anchor point of the daily closing cycle at 4:14 p.m. I'm just showing you this now. Why 4:14? 4:14 is the regular trading hours close. So you can use that also as a reference. I told you it's better to use 4:59, but they're actually both technically correct. Okay. And I told you the significance of the 9:45 time, because many times this is where the market will top or bottom, many times, okay, before it finally starts distributing. So if you anchor your cycle at regular trading hours close, 9:45 will be the beginning of your daily distribution cycle. Okay, so look at that. Exactly at 9:45 we print the high of day, and then we go down. So technically it's correct. Apologies. So but I'm gonna put it back now, anchor it to 4:59, where when electronic trading hours are closing. So we're gonna use that. So you see it, we are within a new week opening up. So once again, it forms there. Okay, so now I will remove these quadrants, or actually I'm gonna leave them on for the time being. I can remove the new week opening gap, since you know we are trading within that, and the quadrants will still be there in order to mark where the new week opening gap is. Okay, so and I am going to drop on the 1 minute chart. I'll show you my execution. All right, it was 1 mini. Enter here. When we broke below first presented fair value gap, this red CB, that's first presented fair value gap of today. I'm gonna leave it small. So once we broke below it, I entered here, didn't even wait for the CB to be confirmed, and then we retraced quite deep into it. Stop loss was above this candle's high. Stop loss above this candle high. Okay. So I'm entering at the first CB. So stop loss will be here above this candle high. Okay. Price essentially traded back into the upper CB here, consolidated, and then once distribution cycle started, it started melting down. Okay. Initially, I was targeting these accumulation cycle lows, but then I moved. Then I moved my take profit further down here to target these relative equal lows here. See them? Those. And there it is. There's my exit. Okay. So, a couple of important things to take away. First of all, there will always be an end dog or an end walk where manipulation goes to before it starts distributing. Always, always, always. It's going to be there. Sometimes you might have to go back a little bit in time, but it will always be there. Okay. And second important takeaway, you don't really need SMT in order to find setups. Okay, your model can form without an SMT, and that's important to know as well. All right. So remember these things, and then keep studying. And I'm gonna keep it short, and I'm gonna leave it at that. So let's see if price can trade further down, close the end walk. And by the way, guys, if you go on the September contract for NQ, for some reason I cannot see it here. It's probably because I'm in this competition of TradingView the Leap, and I don't think I can trade the September contract when I'm while I'm in the competitions account. I don't know, but if you go, like, do it yourself, go on the September contract and find this same new week opening up from June 15th, and you're gonna see different levels here to these quadrants. Okay, the gap will be a little bit smaller, but nevertheless manipulation will go right there, right inside the gap, and it's going to distribute from there. Okay, so just go on your chart and find it. Hey guys, very quickly, I found the September contract and I was correct. You cannot trade that contract while you are in the Leap contest with that account. You have to actually switch to your regular account in order to be able to see the September contract. But this is how the new week opening up looks like on the September contract. So let me show you here between this candle close and this candle open. Extend that to the right, and then we can see it on the 5-minute. During manipulation, price stops exactly at the midpoint of that new week opening gap. Okay, so it's going to be there every single day, a new week opening gap or a new day opening gap. We trade to it, and then price extends either high or low. Okay, and this time I really am closing the video, so until I speak to you in the next one.